Hey friends, I would like to discuss a little bit the analytics about all EVs and see which ones are the best, best positions for the year to come or for the years to come. Let's discuss for this two years ahead for 2022 and 2023. If we see Tesla, we will see that so the November numbers we only have for China, and their capacity, annual capacity in terms of November rate is 634. So their factory in China, Shanghai, is producing currently an annual output of 640,000 cars. In terms of annual rate per, so if you would take the third quarter of 2021, they produced 133,000 cars, and that would make a annual 3Q rate in China for 500,000, and a 965,000, so almost 1 million annual run rate if we take the third quarter and multiply it by 4. In terms of forecast for 2022, if we take what Elon Musk was saying, so the increase of 50%, that would make a 1.5 million for 2022, and again we multiply this by 1.5, 50%, we will have a 2.1 million. I will explain why these numbers will be much bigger, and we will see in terms of PE and PS ratio where that puts Tesla in terms of evaluations. In terms of NIO, very interesting fact is that if we look at annual at November rate, they have 130,000 cars, and Xpeng has 187,000 cars. NIO currently is evaluated at 45 approximately billion, and Xpeng at 32 billion. These numbers are a little bit bigger because I did this yesterday, and yesterday the share price went substantially down, like 6% down for NIO, Xpeng and Tesla. Okay, so you have the forecast. The good news for why I think that NIO is or can be at a $50 to $100 ballpark is because they're currently building the NIO Park, and they are forecasted to do a 1.2 million cars in 2023. They're currently making 250,000. They're having 250,000 capacity in their current factory. Now they're building a NIO Park, infrastructure, like a huge infrastructural park for all the suppliers, batteries, and they will have the production there. And the production there will be of 1 million capacity. In terms of Xpeng, they're currently having 2 factories. They're building a third one now. And they said in the newspaper that in 2023, they're likely to make 400 vehicles. That would make almost double from, more than double from current, from the annual November rate. And this is, if we divide by November rate annual capacity, that would be almost a tenfold in terms of NIO. So basically why can NIO sell all these cars is because, as you saw, they also introduced their ET5 car, which is amazing. The design is amazing. They have a lot of technological things which will be in the ET5. Check my other video about NIO Day and ET5 release to have all the characteristics. But the main point for ET5, why it's going to be a huge game changer, is because right now it's already been noted that they have a very substantial commands for this, so reservations for this ET5 car. And second thing is that because they will challenge more, or they will go more into the mass market, because the base car model, 25 kilowatt hour battery and be a battery as a service would cost approximately in a ballpark of $40,000, which for a car of such a class would be an absolute no-brainer to buy, you know. So I think that NIO can sell these cars, and if we just do a little bit of analytics here, and we will multiply the 1.24, for example, by 50,000, we would get a 62 billion. If we have a 10% of profits here, that's a 0.1, that's a 6.2 billion. 6.2 billion by 47, even a 45 right now. Market cap by 6.2, that would make it a PE of only 7.2. So that's why I believe that, and that doesn't include the forecast in 2024, 2025, the growth expansion of NIO in the years that will come after the 2023. So with a PE of 2.5, I can clearly consider that NIO right now is oversold. Of course, it has problems because it's not listed on Hong Kong. There are some risk of delist from the US side, from the China side, concerning the audit difficulties that they eventually might have, and a blacklist, coming on the US blacklist for some excuse US can find, for example, if China will not give the information that US demands about data and things like this. But the good hedge for Chinese plays such as NIO and XPeng is that the EV Chinese market is already the biggest, and in the future will be one of the biggest. It is forecasted by Deloitte that in 2030 50% of EV sold cars will be in China. So I don't think that US has to cooperate and find a decent solution, good and for China and for US, because Tesla and other companies such as Ford, GM, they want to participate in this biggest market. Okay, so I think that that they will find a solution, and in that case you will see with Rivian, which is currently producing 0 cars or like 20 cars, and Lucid, which is producing like, I don't know, 150 cars and forecasted to produce 100,000 cars in 2023, and Lucid producing 90,000 cars in 2023, with such huge evaluation. You can see that there's a huge premium, and that's why I put it in red, because Rivian and Lucid are very good companies. For sure, it's an American play, that they don't have the Chinese risk, but buying them at this price, and I said this before, that when Rivian was 130 billion and Lucid was at 85 or 90 billion, I said that these prices are completely overpriced, and this price will of course come down. I think that they will come down even more from these levels. And you have Fisker at 5 billion, which is planned to produce 50,000 cars in 2023 with Magna. And in 2024 they will start with Foxconn. So if everything goes according to plan, Fisker might do a 4 or 5x, but depending on the bull, on the bear market. But it's of course remains a risky play, because they don't control anything by themselves, because they work in partnerships, so they're not vertically integrated at all. So let's check the Tesla evaluation, like the real Tesla evaluation. We can see here that, let me just we can see here that at an evaluation of 900 billion, you would have the production in 2021. Of course, it would be much bigger than 874, but let's leave it at that for 2021. Then you would have the production, which would increase from this number to 1.8. So let's put here that in the fourth quarter the number would be 300,000. Okay, so 924, that looks more likely. So production in 2022 would be 1.6 million. That's an average, that's a growth of 80%. Let's see if that's possible. So Fremont would produce 550,000 cars, Shanghai 700k, Berlin 200, and Texas 200. I think that's pretty that looks pretty good. So at the PS of and a PE of 187, they would go down only in 2022 to 104 of PE and a PS of 10, so price to sales. Then in 2023 let's check the numbers. So the growth here would be 50%, and Fremont would produce 700k, Shanghai 800k, Berlin and Texas would be running at a 500,000 rate, and that seems pretty logic. And they would have a 2.5 million market car production with a net margin. I think that the margin will become even bigger because they have the economies of scale, but let's keep it at 10%. They would have a net profit at 13 billion, and the PS here would drop substantially to 6.7 billion, to 6.7, a PS of 6.7 and a P of 69. Same thing would go for 2024, where they would have a expansion of 50%, and their production would amount to 3.7 million only in 2024, with Fremont producing 800k cars, Shanghai 1 million, Berlin and Texas 800,000. That seems completely feasible, and in that case they would have a PE of 46 and a PS of 4.4. I therefore think that they would still keep a 100 probably PE and a PS of probably 6-7ish, and that the price for sure will go up to, in 2022 for sure, the price of Tesla, as it's volatile and depending of course on the market, will it be bull or bear market, it will for sure go to a mark of 1,500. I would even say 1,700. Let's see what a very good analyst says about this in his comments.
Yeah, look, my view, it's not a zero-sum game in EVs. So I don't view it as necessarily if Rivian, Successor, Lucid, GM Ford on the re-rating, that's necessarily negative for Tesla. Tesla has an ironclad grip on EV leadership here in terms of market share. And you look at this green tidal wave. I mean, we think by the end of next year, they're going to have about 2 million capacity in terms of from a supply perspective, given Berlin and Austin coming on board. And I think going into next year, they could be called 1.5, 1.56 sort of million units in terms of what they could ultimately deliver. That would be well above the street with margins that continue to expand. I think that this sort of sell-off on Tesla going into year-end, of course, the Musk selling from a tax perspective, I view it as sort of noise. I think there's a stock that's going to resume its upward move in 2022. 1,400 is our base case, bull case 1,800.
Wow, 1,400, 1,800. Tell me this, because I always felt like Elon Musk was the visionary and so much of the trade depended upon him. And over the last quarter of 2021, you started to feel that maybe Tesla was so good on its own, maybe Elon Musk might take a step back or away from Tesla somehow. And maybe we were getting okay with that idea. Are we okay with that idea or no way?
No, that's a Siamese twin situation in terms of his involvement within Tesla. I mean, Musk is a big part in terms of the visionary, the strategy, the cachet. In other words, part of why Tesla is where it is because of Musk. And I think it's something where maybe the perception he takes a step back, but I can tell you from day-to-day operations, especially in terms of the Texas build out, he's actually becoming more involved. Because I think Elon recognizes this is the fork in the road situation in terms of competition continuing to increase. You're starting to see EV demand skyrocket. And it's really the time for them to, I think almost double down in terms of the vision, model, supply chain issues. China continues to be, what I say, the biggest opportunity, but also it's a challenge, just given what we see happen in China from a regulatory. But this is the time that Musk almost needs to be more involved in Tesla rather than less.